The biggest IPO in history just went live. SpaceX closed up 19% on day one, and while everyone was watching the Nasdaq, traders on Solana lost millions buying fake SpaceX token. Quick rundown today. What actually happened with this IPO, how SpaceX is already trading around the clock on Solana while the exchange is closed, and how you spot the fake tokens before you put a single dollar in it. So Friday was the Nasdaq debut and the numbers are hard to ignore. SpaceX sold over 555 million shares at $135 and raised 75 billion, more than double the old record from Saudi Aramco. The stock opened here around $150, traded more than 30% at one point, which briefly put the company above 2.25 trillion in market cap, and closed at $160, up 19% on day one. Reports put retail orders alone above 70 billion before the listing, and Elon Musk is now officially the first trillionaire. But here's the part that matters for most of us. Unless you got an IPO location through a US broker, you were not in this trade, and the stock only trades when the Nasdaq is open. But the same day the shares start trading, tokenized versions went live on Solana through several issuers, xStocks being the best known one, that made it the first time a newly listed stock and its own on-chain market from day one. The token trades 24/7, including right now over the weekend, while the actual share price is frozen at $160. So crypto is effectively pricing SpaceX through the weekend, and Monday's open will tell us how good that pricing was. So let's be clear about what you actually own here, because it's not the stock. The issuer holds real SpaceX shares as backing and gives you a token that is supposed to track the price one-to-one. No voting rights, no shareholder status. You hold a claim on the issuer plus whatever happens to that backing. And 3 risks follow from that. 1. Price discovery. While the Nasdaq is closed, there is no reference price, so the token floats on pure supply and demand. And if it trades at 180 over the weekend while the stock opens at 155 on Monday, that gap closes against whoever bought the top. 2. Liquidity. The Nasdaq traded over 360 million shares on Friday. The on-chain pools are tiny next to that, so spreads are wide and mid-size orders move the price. 3. Issuer risk. You are trusting that the backing is held cleanly. Probably fine, but probably is doing some work in that sentence, so size accordingly. Now the part I actually wanted to make in this video for: search SpaceX on DexScreener and you get a flood of tokens with the same ticker. Some are legit versions from real issuers, most are not, and they look identically at first glance. The biggest fake did $3.4 million in volume in 24 hours, over 30,000 trades, and sits at minus 79% with about 100 grand of liquidity left in the pool. That is retail searching for the SpaceX tokens, buying the first thing that pops up, and the deployer pulling liquidity. A classic rug, just with the biggest IPO in history as the bait. So if you trade this at all, never buy through a name search, get the token address from the issuer official site, click on Solana for example, and copy the real token address from here. So zooming out, SpaceX is just the opening act. Citi is rolling out tokenized shares of private companies. Japan just advanced a bill regulating crypto as financial instruments, and Citi's own research packs tokenized asset at 5.5 trillion by 2030. The rail is real, but that does not mean every token on the rail is worth owning. My base case: tokenized stocks become normal infrastructure, and most of the tokens riding the narrative right now go eventually to zero. Trade the thing you understand with a plan, not the thing trending in a search bar. If you take one thing from this: official address, real liquidity, and respect Monday's open. Would you trade tokenized stocks or stick with the real thing? Tell me in the comments. And the usual reminder: this is educational content only, not financial advice. See you in the next one.